Gold prices have reached a record high, bringing the value of an average bar up to $1 million for the first time.
It comes amid widespread expectations of impending interest rate cuts. The spot gold price held steady on Wednesday at just over $2,500 per ounce. Well, let's talk to Clem Chambers, the finance author and CEO of online blockchain PLC. Clem, good to see you. Why do you think gold is rising at such a rate at the moment?
Well, I believe the main reason is just general geopolitical tension, because gold is really the key asset for governments to hold in really, really difficult times. So as governments get more nervous, so they lay in more gold. And I think you're seeing that demand around the world because there is just a general level of tension that is increasing. And, you know, you can see with the American election coming up why people are becoming increasingly nervous. On top of that, of course, we've had inflation for a very long time at high rates around the world. And that hasn't actually come through very much into gold. And now it's coming through into gold. So you've got this pincer movement of inflation working its way into the gold price and also increasing global tension.
For those of us who are amateur watchers as opposed to experts like you, this is counterintuitive slightly though, isn't it? I mean, why is gold rising when inflation is largely falling? Because normally it would go the other way, wouldn't it?
Well, gold has become, over the last few years, quite counterintuitive. So, for example, gold miners haven't seemed to have gone up anywhere near as much as they should with the gold price going up. And when we had inflation take off, the gold price didn't take off. And when interest rates went up, it didn't really affect the gold price that much. And that's in the book, it should have a big effect. But, you know, the world these days is much more controlled by central banks. And they basically have the levers to make whatever asset they like go up and down. But in the end, even they can't stop the old-fashioned drivers of the economy and of assets from actually moving. So you're seeing inflation affecting things like orange juice and pork bellies and copper and gold and silver all at different times, and chocolate and coffee. But it's really just inflation breaking through into those commodities. And you're seeing, I think, finally inflation breaking through into the gold price. So it's kind of stored up, it's been dammed up behind gold, and now it's broken the dam, and therefore the gold price is moving, coupled with this global geopolitical tension, which is really one of the big drivers of gold price, and has been forever, really.
Does that mean that gold's role as an inflation hedge has therefore gone away?
Or perhaps just been delayed. You see, all commodities are, in the medium term, inflation hedges. And, you know, it doesn't matter if you get, say, 10% inflation this year and the price of coffee doesn't move. It will move at some point. Coffee will go up that 10%. It's just a question of when. And you're seeing that with gold, and you'll see that with, say, with silver, and you'll see that with platinum. All these precious metals will move alongside. But because of the way that central banks are between the economies and those sort of economic drivers these days, you haven't got a direct linkage that kicks in immediately. It has taken time for those economic forces to break through the sort of barrier of the central banks actually highly manipulating prices and global markets these days.
OK, well, look, given all of that, in what scenario would gold fall?
Oh, I mean, you know, boredom mainly. I mean, if the angels sing and the sun shines and everybody's happy and interest rates go down and they find more gold, then gold would fall. I mean, gold, there's several percent of the total world's gold supply is increased every year by miners. So there's always more gold coming onto the market. Of course, it's also being lost. But, you know, 1–2% of gold is produced extra every year. So if inflation came down and everybody was happy and tension fell and people just thought gold was good for electronics and jewelry, then gold would fall. But over time, gold keeps pace with the value of money, and the value of money has been going down, and therefore the price of gold has been going up ever since the world began, really. I mean, it was $25 in 1971. Now it's 3,000 whatever.
Yeah, Clem, both you and me missed out on that. Good to see you. Clem Chambers, CEO of online blockchain PLC.